As we hit peak home buying season in the US, the signals across the country are mixed at best, with some markets accelerating a bit and others slowing very quickly. The inventory continues to build across the country, and that's happening most rapidly in the South. Home sales volume continues to run just a little ahead of last year, but with mortgage rates in the sevens, there are just a ton of potential home buyers sitting on the sidelines. So the pace of sales isn't like breaking out. Instead, we have just a few more sales than a year ago, and that gap is not really improving. And while you'll hear headlines tracking home prices up maybe 5, 6, or 7% over last year at this time, the real time and leading indicators for home prices we track at Altos are showing weaker than that. In fact, some of the indicators are showing no price gains at all over last year. So look for the home price headlines to drop down in the second half of the year. All in all, you can see how effectively 7% mortgage rates have slowed this housing market. Rates, however, may be inching lower now, with the yield on the 10-year Treasury moving lower and the spread between the 10 and 30-year mortgage rate may be compressing finally a little also. If rates move back into the sixes soon, or mid sixes, expect a little uptick in sales volume and maybe some recovery in the leading indicators of home prices. So this Thursday, May 16th at 10 a.m. Pacific is our monthly webinar where we get to deep dive on all the local data trends and the leading indicators for what we can already see in the second half of 2024. If you need to communicate about the real estate market with buyers and sellers right now, you should join us. There's a link in the description below for the May webinar. Click that to reserve your spot now. These are limited to 1,000 attendees, and we get way more than that want to join, but you can still reserve your spot now. At Altos Research, we track every home for sale in the country every week. So the data is so often defies expectations or changes very quickly. So we track all the pricing, all the supply and demand, all the sales, all the changes in that data so that you can understand it immediately as it happens. I'm Mike Simonsen. I'm the president of Altos Research, and let's look at the details of the U.S. real estate market for mid-May 2024. It's the peak of the home buying and selling season for the year. So there are now 568,000 single-family homes unsold on the market. That's up 1.5% for the week, and not a massive gain, but inventory is growing and will continue to grow over the next few months. There are 35% more homes on the market now than a year ago. The gap from last year continues to spread. And we're currently expecting 700,000 homes unsold on the market by end of September or so. In the webinar on Thursday, we'll take time to examine the inventory forecast nationally and for many of the local markets. This inventory chart is a handy way to illustrate how sensitive consumers are to changes in mortgage rates. So remember back in 2022, as mortgage rates were rising quickly, so was inventory. At that time in May of 22, the inventory was climbing by like 3 or 4% each week. And that's the light red line here. See how it was curving dramatically higher each week? By mid-May, inventory in 22 had climbing and overtaken the prior year, and we were moving out of the pandemic era. And you can compare that curve then to this year now, the dark line, and inventory is climbing now by 5, 10, maybe 15,000 properties per week. In 22, inventory was climbing by 20 or 30,000 homes per week. It's a very different market now. Last year, the biggest inventory gain all year was about 6,000 properties in the biggest week all year. And so see how the light red line from last year was flatter all year long. Inventory in 23 didn't really accelerate until mortgage rates jumped over 8% in September. And we have more sellers now as rates have stayed higher for longer. So those high rates let unsold homes accumulate on the market a bit. And so this forecast will compress a bit if mortgage rates finally decline. They haven't come down yet, so inventory keeps building. There are slightly fewer new listings this week hitting the market. 69,000 single-family homes newly listed, plus another 20,000 that were newly listed and are already in contract are immediate sales. So that's actually 3% fewer new listings than last week, which is a little disappointment. Like, I'm still feeling optimistic that more sellers will help this market to grow. So I'm hoping that the new listings number to be like over 100,000 sellers each week. We're at 89,000 total this week, so it's a little bit of a disappointment. Still, there were 10% more sellers this week than last year at this time. So there were more new listings unsold, more immediate sales, and there are 24% more houses marketed as coming soon right now than last year. All of these indicate that total inventory will keep growing and that sales volume has room to grow also because there's simply more supply available. So this series of new listings can bounce around a lot for a lot of reasons from week to week. In the new listings chart here, each line is a year, and you can see how they squiggle a little bit. The gray lines are past years. The takeaway on the new listings chart is that a healthy market would be like past years where there were 100,000 or more single-family homes newly listed in a given week. We have more sellers than last year, but not a lot of sellers. So hopefully we have a few more weeks where this series continues to climb. Keep your eyes on that. The total count of homes in contract, the pendings, is just barely above last year. There are now 393,000 single-family homes in contract. That's an increase of a tiny fraction from last week. And there are just 2% more homes in contract now than a year ago. So these are homes that are on the market, or that are in the contract pending process, in escrow to close. The sales will close in May and June. So showing a little growth over last year, but not much. There were 72,000 new sales this week, which is actually 7% down from the week prior, but still 6% more than the same week a year ago. Each week, more sales are getting done than a year ago. In this chart, we have the total number of homes in escrow to close for each of the past 3 years. So you can see home sales peak in June. There are 2% more homes in contract now than a year ago, but 15% fewer home sales than in 22. 15% fewer. See the light red line for 22? There were 460,000 single-family homes in contract to sell at this time in May. The pace of sales fell dramatically in July of that year and again in September when mortgage rates spiked again. So by the end of 22, at the right end of this chart, the pace of sales was way off, setting 2023 up to be such a drought. This year, the sales are slowly inching higher. I think it's interesting that we continue to have about 5, 6, or 7% more homes going into contract each week, but the total number of homes in contract is only 2 or 3% more than a year ago. I think what's happening is that home sales are closing faster than last year, so we're measuring fewer days in contract by our days in contract stat. In 22, the days in contract grew to close to 40 days as the market slowed. This year, we're measuring the average days in contract about 33 days. So you can imagine that home sales get delayed as financing changes rapidly. That happened last year. This year, for example, there are more cash sales, so you don't have to wait for financing to close to get the transaction done. So last year, there were not only fewer sales starting, they were taking longer to close. These nuances help explain why we see more sales happening now, but many of the measures of the mortgage market have not yet grown over last year's pace. So let's look at prices. The median price of single-family homes in the U.S. is $450,000 now. That's unchanged from a year ago. See how the lines are converging in this chart? That shows home prices no higher than a year ago. This is the price of the new listings is also pretty close to $450,000. That was up for the week. The change in the new listing prices is actually a contrary kind of bullish indicator on prices. It is the one series that's up while the others are flat or compressing compared to last year. So we're probably right at the peak in for the year of the new listings prices for this for that series. New listings typically peaks in May, and then the market shifts towards the second half of the year. The price of the homes in contract is $400,000. That's unchanged for the week and up just 4% over last year at this time. So the homes you have to choose from in the U.S. are listed at $450,000, but the price point we want to buy is $400,000. The list prices are flat from a year ago. The pending prices are up just a little bit over last year. In both of those cases, we see the tendency for prices to cluster around the big round numbers. So if you're selling your home for somewhere around $450,000, for attention and marketing purposes, it's better to price it right at $450,000 or at $449,000 than it is to price, for example, at $451,000. So prices hit these plateaus at these big round numbers, and then they jump. Right now, the list prices are plateaued at $450,000, and the sales prices are plateaued around $400,000. In this chart, you can see the annual trajectory for home prices. This is the asking price for all the homes on the market. I want to highlight this asking price series now because you can see how the prices climb in the first half of the year to peak in June. In 22, the light red line was still climbing rapidly with that momentum from the pandemic. I've highlighted that June 22 section in gray here. Last year, the red line showed home prices were growing much more slowly in the first half of the year. The slope is lower, but stayed elevated, more elevated in the second half of the year. At the right end of the chart, you can see how 2023 set us up for home price gains we've seen so far in 24. But the slope of appreciation for this spring has been slower again. So those home price gains are gone. By this measure, looking at the asking price for all the homes on the market in the U.S., home prices have a 0% appreciation from a year ago. Home sellers know exactly where to price their homes to sell, and this tells us a ton about future sales. And as we look at the leading indicators of future sales prices, we conclude today with the percent of homes on the market with price reductions. These price cuts are, of all the listings, how many have taken a price cut from the original list price. Currently, 33.7% of the homes on the market have taken a price cut. That's up 30 basis points from last week and 410 basis points, 4%, over last year at this time. Pretty significantly more price cuts than last year at this time. And as you can see in this chart, there are more homes on the market now with price cuts than in any recent May. You can also see that the rate is climbing each week. I've illustrated the past 3 years here in red. The gray lines are each of the years of the prior decade. So the price cuts, they're always happening this time of year. The bulk of homes get listed in Q2, and if they don't get offers, they take price cuts. So that peaks later in the year before the holidays when the seasonal cycle resets. What we see now is that more homes have price cuts, and a pretty significant number each week are adding to that set. So if your house is listed now and it doesn't get an offer, maybe you cut your price in June, it gets an offer in July, and that closes in August. So that's what we're watching right now. And that's why we do this data work each week. The market is trying to grow, but home buyers are very obviously sensitive to the cost of money. So if you aren't watching the data each week, you're probably behind the curve. You have buyers and sellers who have no idea how this market is changing right now. They need to hear the data from you. If you need to help buyers and sellers communicate, see the actual data, go to altosresearch.com and you should join us. Book a free consult with our team. We'll help you talk about the market and understand the local market so that you can communicate with your buyers and sellers right now. So there's a link in the description below to join us. Click that and let's get started. Thank you.